Our call of the day, it is Nike. Want to show you that stock, too. Wells Fargo cutting the price target. They cut estimates as well. They do reiterate outperform. Price target to 120 from 130. That is still a significant upside from the 95 and change that it trades at. Now, Joe, you own it. Man, this stock has been really questioned in the last couple of months.
Yeah, so this clearly has been one of the worst additions to the quality momentum strategy. It was entered as a new position at the end of July. It's gone straight down. So far this quarter, it's down 12%. That's coming off of 2022 when it was down 29%, and it's down 7% year to date. So there's no argument. The technicals are broken. And I think even consistent with what Marko Kolanovic is saying, you could say the same for Nike, where perception doesn't always meet reality. So the perception of Marco's note, right, is that there's this ominous sentiment forming for markets. Well, that doesn't mean in the next 3 months markets go down. You could be okay for 3 months and 6 months later that goes down. And the same is the situation for Nike. Everyone is expecting this recovery. But in reality, the recovery is not coming. And I think you have to be humble and candid with yourself to acknowledge the reasons why. This is a company that has 65% revenue exposure outside of the United States. And outside of the United States, that's where the economic weakness is, whether it's in Europe or whether it's in Asia.
Well, I'll pick at what you said for a minute, because I would disagree in some respects with the characterization that you make. I mean, you talk about sentiment of what Marco's talking about. He's not talking about sentiment. He's talking about fundamentals. He's talking about valuations being way too high versus where real rates are. Nike's problems, which have held the stock back, are not one of sentiment. They're of fundamentals, because of the very things you just suggested. Overseas, where Nike gets a significant part of their business, is weaker. China's been a real question mark.
Okay.
That's a problem. The stock's down 18% year to date, not on sentiment, but on fundamentals.
They've missed their last
so
two
let me
quarters
respond to that.
Let Joe respond. I'll get you in.
Let me respond to it. And yes, Stephen, they have missed in the last 2 quarters. And again, that's the reality. But just as an example, I saw this morning someone took Nike. What's the note right here from Wells Fargo? Wells Fargo goes to 1.
Yes,
right.
Wells Fargo took the price target from 130 to 120. HSBC cut the price target to 113 from 120. Well, they reiterated the outperform. I mean, what do you want them to do? Put it on sell? How often does that happen on the street? How often does that happen?
No. But, Scott, that's what I'm talking about with sentiment. That's what I'm talking about with perception. Okay, you have to be candid and humble and say something is wrong with Nike. But everyone that comes on the network, they're going to tell you one thing. Oh, Nike? You want to buy Nike down here because this is a great balance sheet. The valuation is cheapened. It's a proven company.
Well, and
that's the same thing overall for the market. No, I'm telling you the stock is broken technically. I'm telling you that the revenue, the global revenue, has headwinds in front of it because 65% of the revenue is coming from the rest of the world. I'd rather own Lululemon, where 65% of the revenue is coming from here in the United States. So, no, I'm acknowledging the position's a lousy one. I think Nike has a lot of challenges in front of it. That's the reality. And that's exactly what I'm talking about overall.
Okay.
I don't think you can compare Lulu to Nike. Lulu works in what is still a niche market with very little competition and manages it very, very aggressively in terms of keeping that into a niche market. Versus Nike, Nike is much more exposed to the economy because their product line is so broad, their business not just regionally, is so broad. So those are the issues. So if you see consumers trading down,
I don't understand when you say you can't compare the two. No, I just clarify when you say you can't compare the two.
It's like you can't compare a beer company to a soft drink company. They're both in the same space, but they have different dynamics.
Right.
So Lulu is going to a higher end consumer in a niche market that has tremendous loyalty without much competition. What have you got? Alo is one, Athletica. They're not real substantial competitors. Versus Nike, we're seeing competitors start to encroach on their market share, not significantly, but my point is that they are much more an economic animal in terms of their broad exposure than Lulu, who's dealing with a much higher end consumer who doesn't have to trade down or delay purchasing.
Well, you know what you can compare Nike to, because HSBC does it, Adidas and Puma, Joe, where they suggest they prefer both to Nike. I mean, how often have you heard that?
But yet they're all apparel companies. If I'm an investor, or if I'm a portfolio manager,
they're footwear and apparel companies.
And I'm okay, they're footwear, they're apparel companies. They're in the consumer discretionary sector. If I'm looking at my potential alternatives, I think I've got Under Armour, I've got Nike, I've got Lululemon, I've got Adidas, I've got Puma. Yes, I've got all those companies collectively that I could look at. And quite candidly, I think there's other places as a portfolio manager you could go. You just gave two other examples that I didn't. And certainly, I think, Steve, you would agree, I'd much rather own Lululemon than owning Nike. And that's from someone who owns both, unfortunately.